The banana zone is that period in crypto markets which you would call altcoin season. It's when everything just starts going vertical. Now, it always comes in the US election year because of this cycle, which is the Bitcoin halving cycle, which is this everything code cycle. And it tends to come around the summer or autumn of that year, and things start accelerating and get silly. And when prices start going bananas.
Welcome back to our channel. In today's video, Raoul Pal introduces the concept of the banana zone, which refers to periods in the cryptocurrency market where altcoins experience significant, almost vertical price increases. This phenomenon typically occurs during the US election years due to the Bitcoin halving cycle and the resulting everything code cycle. Historically, this cycle accelerates around the summer or autumn of the election year, leading to exponential growth in altcoin prices. The Bitcoin halving cycle, which reduces the supply of new Bitcoins, has a profound impact on the entire crypto market. As supply decreases, demand typically increases, driving up prices not just for Bitcoin, but also for altcoins. This cyclical pattern creates the banana zone, characterized by rapid and sometimes irrational market exuberance. Pal emphasizes that while these cycles are not guaranteed to repeat perfectly, they are influenced by liquidity, macroeconomic factors, and central bank policies.
The banana zone is that period in crypto markets which you would call altcoin season. It's when everything just starts going vertical. Now, it always comes in the US election year because of this cycle, which is the Bitcoin halving cycle, which is this everything code cycle. And it tends to come around the summer or autumn of that year, and things start accelerating and get silly. And when prices start going bananas. This is the Bitcoin halving cycle. It's that chart. That chart is the chart. That's why it looks like a banana. It's just like, it just does this. And it's why we're all in crypto, to be honest. This space is a $2.5 trillion space today. By the end of this cycle, it should be $10 to $15 trillion. By 2032, if you continue growing at these kind of rates, you get to $100 trillion. So there's $97.5 trillion of money on the table, which is why I keep telling people not to fuck this up, because the opportunity is so big. And that is just by owning the new internet, essentially. So that's what this is all about. So there is a banana zone, which is the periods of time where it goes bananas. Then we get the corrective periods, and then we repeat this cycle again. Now, will everything repeat perfectly? Will it be identical? No. You know, there's no guarantees come with this. But it's based on the liquidity cycle. It's based on the macro cycle. It's based on interest rates. It's based on a lot of things. You know, I've been following this chart for a long time. It has been, you know, we now come into the season where this tends to outperform. It's usually when the ISM is picking up, the altcoin season starts, the liquidity season starts. The banana zone tends to be the period when ETH outperforms. So we're in that zone. It really picks up next year, but starts this year. If you go back to 2020, ETH started basing and then started outperforming from about the summer onwards and really started picking up towards the end of 2020. And then by 2021, it went ETH-tastic. You know, it went into full banana zone. I think we'll see something similar. You know, I also think ETH will underperform Sol. People get confused when you show them this
I want to
chart.
go there.
What? You don't like Sol anymore? It's like, no, I think Sol outperforms this. But I think ETH outperforms Bitcoin, and I think it's healthy for the space because it shows a deepening and broadening of the overall space, which is what we want. If you think of what liquidity is doing, why the central banks and governments are injecting liquidity, it's to be able to fund the debts. We're in the big debt funding cycle this year, which is why the banana zone happens and why the everything code cycle, all of this happens. They have to fund all the debt. And so they inject liquidity into the system. They do it via rate cuts. They do it via the reverse repo. They do it via quantitative easing. They do it by any mechanism they can to roll the debt. And that's Europe, the US, China, Japan, the UK, everybody, right? So they all do the same game. So they're all teeing up. They've been waiting for inflation to come lower, ready to start hitting the accelerator. Liquidity has been rising, which is why the markets have been rising. But it gets to the phase where it has to go up a lot to finance, $10 trillion of stuff that needs to be financed. So that's all to come. And that tends to happen this year and next year. Well, outside of the ETF just gives them the cover to use ETH as their foundational layer for the stuff that they want to do. Because Goldman Sachs is not going to be using the ETH ETF. It wants to use ETH, as does JP Morgan's everybody else, to tokenize assets and do other stuff. What is super interesting to Wall Street is yield. Yield allows you to build products. You can do all sorts of things with yield. You can take the ETH yield and buy call options to give you upside or guaranteed products. You can create structured products. You can do lots of things. So I think that they've always been interested in ETH, and I've said this for a long time, is the ETH yield is the big game in town. Not because it's high yield, but you can do lots of financial engineering once you've got yield. They also all want to build on the technology, whether it's on a layer 2 or on ETH itself, but this is where they're going to start tokenizing a lot of assets. Nobody gets fired for using Ethereum. So,
Yes.
That's a choice. And most of these people have been building, most of the banks have been building in this space and had teams since 2015, 16, 17. So if you think of the technology they've been using, it's generally ETH. So they understand ETH. ETH is the big one. You don't get fired for it. Your board's not going to tell you off. Why did you use some random thing? But we've now got the flexibility of the layer 2s, which makes it cheaper and easier, depending what level of security they need. So look, I think it's a very, very big deal for the financial markets. Much bigger than it is for retail.
While discussing the speculative nature of the crypto market, Pal touches on the phenomenon of meme coins. These tokens, often driven by internet culture and social media trends, exemplify the speculative and sometimes absurd side of the market. Pal views meme coins as a form of cultural and speculative betting, akin to gambling, but with better odds than traditional lottery tickets. The rise of meme coins also serves as a proof of concept for broader applications of blockchain technology. Despite their speculative nature, these coins highlight the potential for digital assets to capture cultural relevance and generate significant financial activity.
I think 99% of all meme coin charts look like that. So they're as bad as every other fucker launching a meme coin.
Okay.
But fine. Everybody knows what this is about. This is pure speculation on, is this cultural meme going to gain relevancy or not? Does me as Caitlyn Jenner have relevancy that can persist or not? That's the game. That's why the Bowden and the Trump and all of this stuff, right? It's, can a meme be persistent? So I don't have a problem with it as long as everybody knows that this is a game of betting on raindrops going down windows. And we are humans, we all bet on it. And some of these memes are persistent for centuries and others persist for an afternoon. And
Okay.
as long as everybody has a smile on his face that you've got on your face now when you're laughing at the ridiculousness of this space and realize that all we're doing is speculating, that all we're doing is going to Vegas, but with slightly better odds than the lottery ticket, that Americans spend $110 billion on lottery tickets every year. Well, they have better odds in the meme coin casino. So I also think it's very early stage proof of concept testing of what will develop out of this. How much do your parents care about crypto? That's the age of these people. I mean, they don't really care, but they care about the voters. And look, Coinbase has 108 million accounts, of which right now maybe 10, 12 million are active. As you start going to the banana zone, that starts going from 10 million to 20 million to 30 million. So suddenly it becomes a lot of voters. Add that to the political power of the firms that are involved in the ETFs, and it's now actually a funding issue for these people as well, because if they say the wrong things, then the big financial sponsors for their super PACs start applying pressure. So I think it's much more of an issue than they first realized, and I think Liz Warren made a fatal mistake of saying we're building an anti-crypto army without realizing you're fighting a bunch of degenerate meme artists who are native to the internet, who are distributed everywhere. That's not an easy battle to take on. And I think they're starting to realize that this could be their own goal, because obviously RFK as well is running on a pro crypto format. So the Democrats, they either have to kind of fall in line, or they're going to try and say, we are the party that stands against this. But who does that play to? They're not going to get the swing voter by doing that. The full crypto army is not in swing yet, right? The full retail is not there. So I think that, yes, those of us who've been around the space and been through the whole bear market, I don't think you're going to win us over. But does the swing voter, the extra 20 or 30 million Coinbase accounts that get reactivated, can they win those back so they're showing they're not opposing them? Look, it's possible. I think that's why the Democrats are giving it a go. It's like, okay, well, maybe these guys will forgive us. A bunch of us won't, but ordinary people, if they don't see it as an issue, then they won't worry about it.
The political landscape is increasingly intertwined with the cryptocurrency market. Pal points out that with over 108 million accounts on Coinbase alone, the crypto community represents a substantial voting bloc. As the market grows, so does its political influence, prompting politicians to consider the implications of their stance on digital assets. Pal notes that some politicians, like Elizabeth Warren, have positioned themselves against crypto, potentially underestimating the resilience and organization of the crypto community. On the other hand, pro-crypto candidates like Robert F. Kennedy Jr. are leveraging their stance to gain support. The political power dynamics surrounding crypto are evolving, with significant implications for future regulatory developments. Please like and subscribe my channel.